Hello, everybody. My name is Jeremy Sword, and I'm here to present Costco. So, the thesis is Costco is a leading wholesaler and retailer with an annual Royal membership base, efficient cost structure, and consistent traffic growth. Despite many measures of from inflation and fuel volatility, its membership model and strong renewal rates position it for strong long-term sustainability and earnings growth. My recommendation is to buy. Here is a revenue breakdown demonstrating its revenue. Um, First being the U.S. operations, where a um, majority of their revenue comes from. Primary driver of its revenue, all domestic household sales. Then we go on to show their international operations, which is 20%, which includes Canada, Mexico, Japan, South Korea, and Taiwan. Then we go on to membership fees, which is 2%, the recurring high margin revenue of annual membership, which specifically come from gold and executive memberships, and e-commerce and artistry, which also comes from 3%. Here is their financial performance. Revenue growth from 2024 was plus 7.5%. 2024 was the same, and currently it sits at 5.75%. The EBITDA growth ratio, EBITDA growth ratio uh, from 2023 was 13.06%. In 2024, it was 13.3%, and currently it is sitting at 11.34%. The gross margin is 12.6%, um, currently sitting at 12.5%, and the cap expenditure is currently sitting at 10.28%, with the EBITDA ratio currently sitting at 35.63, with an high average of a high 5-year average of 22.56%, with the operating margin being 3.6%. Here's the catalyst, showing all their um, services, their membership growth and loyalty. Costco, consistent 90% renewal rate and increasing executive membership upgrades will continue to expand its high-margin, recurring membership revenue and enhancing financial stability. Their private label expansion, Kirkland Signature, continues to grow. Kirkland Signature, which now accounts for over 25% of sales, drives higher margins and consumer loyalty, differentiating Costco's from other competitors. International expansion, strategic entry into underrepresented markets like China, and further expansion into European and Asian markets will serve as key growth drivers for long-term revenue and store footprints and expansion. Digital optimization and growth going on, investments in e-commerce, delivery, and business centers will enhance the um, convenience, drive basket size, and increase retention, especially among younger members. Here is the evaluation. The EBITDA evaluation is currently sitting at 35.63, which is significantly higher than its 5-year average of 29.08 and above the industry average of approximately 12.9%. This elevate this elevated evaluation reflects Costco's robust financial performance, including consistent revenue growth, strong membership renewal rates, and effective operations. However, it also suggests that stock may be priced at a premium compared to its peers. Given its current evaluation above industry peers, Costco's stock may be considered overvalued, but investors should weigh this premium against other companies with strong fundamentals and growth when making an investment decision. Here are the risks. Currently, with the current administration, the escalating tariff and trade tensions, they've significantly increased tariff on China's imports, reaching up to 145% as of April 2025. These tariffs impose risks of higher costs and potential price increases for consumers. Current fluctuations in international exposure: 31% of its warehouses are located outside the U.S. Costco is exposed to foreign exchange risk and fluctuations in currency value that can impact the company's international revenue. Inflation and consumer spending behavior. Consistent inflation has led to an increase in the cost of living, causing consumers to behave more selective with their spending. Here is my conclusion. Now, despite modest revenue deflation in recent quarters, Costco dips is offset by steady EBITDA growth and steady EBITDA growth and um, steady EBITDA growth and um, and disciplined capitalization, allowing for investments in global expansions, logistic automation, and enhanced optimized optimum, optimal channel capabilities, reflecting a long-term focus on efficiency, quick scale, and customer retention. The recent uptick in capital expenditures align with Costco's aggressive warehouse expansion strategy, including new market entry in China and continued growth across the United States. Furthermore, rising tariffs and inflationary pressures mirror past macro cycles where Costco historically outperforms um, due to overvalue due to value-based model and loyal member base. Much like Costco, it's leveraging AI and cloud to shape its future um, in tech. Costco is positioning itself as a retail leader in resilience, operational excellence, consumer trust, and high margin membership model, strong international momentum, and strategic private label growth. Costco is working to remain a cornerstone in consumer retail for decades to come. Thank you so much. Thank you.